Alright, good morning, good morning. It's been a while. I haven't been doing a bunch of these streets, but price action has been quite interesting these past few days. There was a really nice setup yesterday that I will be going over with you guys here, but pretty much this entire week so far has been interesting. So Tuesday we just dropped pretty hard, but we didn't have much of a setup after I say like 11 after like 11. One thing I have been noticing is that we tend to have like a really strong move during the New York AM session that has a lot of volatility, but right when we get into the New York PM session, after we complete the objective, there really isn't anything else that price really wants to do. Just something that I have been noticing. But yeah, this is the 4-hour time frame. I do have the daily charts put up here. So there's the daily chart, weekly chart, and this the monthly chart here. So to be honest, coming into today, I don't really have a bias. You can tell that we are in a 4-hour fair value gap and trading inside a a daily higher time frame bearish PD array, this daily fair value gap as well. So we are trading in higher time frame bearish PD arrays, and we are also trading inside a 4-hour fair value gap here. So we're kind of bound, or 4-hour BISI. So we're bouncing between a BISI and a SIBI on the 4-hour time frame, which kind of makes it a little bit difficult to kind of distinguish a direction that prices wants to go in. Here, this is when I would trade just intraday models, like 15-minute models. But yeah, as you say, we're basically trading around the weekly open here right now. But yeah, anything could happen here. So I believe we have already created the weekly low on Wednesday and the weekly high on Monday. So yeah, I don't think there's any much. If this is an up close candle, then we could trade up to here and close around this 0.2 to 0.3 level. Or if it's a down close candle, then it would be the complete opposite. We'll be trading within down here. But yeah, let's take a look at what the dollar is doing here. So dollar looks like it's rebalancing. It looks like on the daily time frame on the dollar, it looks like we are going to rebalance this daily fair value gap, which I wouldn't have anticipated, because I would have treated this daily fair value gap as a breakaway gap. But it just shows you that if we disrespect this 4-hour fair value gap, then that means we will most likely rebalance that daily fair value gap. So on the lower time frames, that's when it will show you when there's a shift in market sentiment, at least on the daily time frame. So here, daily time frame, like I said, rebalancing this daily fair value gap here on the dollar. So if we're trading lower here on the dollar, we should be trading higher here on the indices. So I actually do want to pull up the SMT chart here just to see what's happening. Pretty large SMT here. We see NQ and ES right now. NQ has yet to take out its Monday's highs, whereas ES did. So there's SMT there between ES and NQ. Yeah, there's a larger SMT right there. We've already completed the weekly objective and the monthly objective here last week, so I'm not really anticipating much coming into this Friday, to be honest. This I would practice discipline and really just stay away from the charter, to be honest, because there's not really anything for us to force here. We don't have a higher time frame objective. The daily time frame, it's unclear what we really want to do, because yeah, I don't know. But here's the S&T charts, and in about, I say like a couple minutes, I'll go over the yesterday's trades, because yesterday's trade, I believe, was really clean, and I do want to go over it with you guys just so you guys can see a better picture of how I view price action. Previous month's high, yup. Did anticipate that. Last week here, I actually took a trade down here on a higher time frame wise. I took a daily model instead of a 50-minute model. I ended up taking out previous month's high, which was the monthly objective for this month. But yeah, if you guys take a look at this 4-hour fair value gap that we could possibly create here in 20 minutes, this fair value gap, you want to ask yourself, will this fair value gap be treated as a breakaway gap, or will we treat this as a gap that we will rebalance? If I can find a short model to rebalance this fair value gap, just to trade into this fair value gap and then close my trades, then that would be all for today. That's my morning objective. If we can get a closure below the previous 4-hour candles high, if we close below this 4-hour candles high and I get a bearish, 15-minute / 30-minute setup, bearish model, then I'll short to rebalance this 4-hour fair value gap. After we rebalance this 4-hour fair value gap, then I would just sit on the sidelines. But yeah, that would be my morning objective here. If I want to see how we close here first on the 4-hour time frame. But yeah, like I said, pay attention to how we close here. I do want to see if we will rebalance this 4-hour fair value gap or not. And see what. Okay, we still have about 22 minutes left, so I'll just be aware of that. And in this time, I'll actually go over the trade from yesterday. First, I want to start off with the pros and cons from previous week. So, if you guys been watching me long enough, I'm sure you guys have found certain patterns that I do. So I tend to stick to the 15-minute time frame and trade the 15-minute models, and there's usually time frame alignment between the 15-minute model, like the 15 and 30-minute having the same low. But in this specific case, last week I was able to actually long a daily model. So coming into the previous week, I was bullish. I was anticipating for prices to take out previous week's high. So I'm sure you guys are probably like, okay, he's talking about previous week's high. I can't visually see that. So let me show y'all. This is a weekly candle right here. So all of these candles right here are weekly candles. Based on this weekly candle right here, so previous week, so the week prior to previous week, I was anticipating for us to take out previous week's high in this trade, right? So if I want to be a buyer, I want to be shorting, or I want to be longing below the weekly open. And keep in mind that my entry here is actually at the weekly open, but it is in confluence with price structure. So there's a 4-hour fair value gap that we're retracing back into. I believe and I have confidence that we will hold that 4-hour fair value gap, because the weekly objective is to take out previous week's high, and the daily objective is to take out previous day high. So the daily and the weekly time frame are telling us that we are going to continue higher. And this, you may see how we kind of really came really close to taking out previous week's high, and it may even look like we took out previous week's high, but we didn't. We left it as relative equal highs. So I set a trade, a limit order to target previous week's high during the Asian session, and when I woke up, we ended up taking out previous week's high and previous day high. So what I'm trying to go back to is that's one of the pros. So I was able to formulate a trade plan, right? Even though it's not on the 15-minute time frame, I understand that prices is fractal, and I'm able to take a a daily model instead of a 15-minute model. This just shows you how fractal prices could be, and majority of the trades that I take, I'm sure you guys, like I said, I like to be a buyer below a certain price opening, and I like to be a seller above a certain price opening. So in this case, in this higher time frame trade, I was able to long below the weekly open. And yeah, that's just one of the pros here from last week. And another pro is being extremely patient. I actually have gotten a lot better at being content with sitting on the sidelines and just watching price action. If there's no model that presents itself, I've gotten accustomed to allowing the markets to come to me and not really forcing anything onto the markets. I don't want to force a viewpoint, a false narrative, while the market is going to always be true. I can't, my thoughts and my perspective on the markets will not affect how the markets move. The market is it's not tangible. It's it's the data is not going to change how you. It's not going to change if even if you do some freaking magic towards it. It's never going to change. What I'm trying to say is I'm understanding that you can't really force a narrative onto the markets. The markets give you the narrative. So going back, being really patient, and one of the cons here is, one of the cons from last week that I could improve on is, so during the trade I took on October 11th, 2024, I took this trade because we traded inside a 15-minute and 30-minute fair value gap here. We were continuing to hold that fair value gap. So we never showed signs of a complete disrespect. A complete disrespect would have been a 15-minute closure below this 15-minute fair value gap, or a 30-minute closure below this 30-minute fair value gap. However, we never got that closure below. So whenever prices had this reaction to the 15-minute fair value gap, a bullish reaction to a bullish fair value gap, and we have a high right next to the left, I'm anticipating, okay, prices could actually take out the 15-minute high and then take out this New York PM session high from the previous day. So I would go into the lower time frames to find an entry pattern. The con is I didn't treat this 5-minute fair value gap as a complete breakaway gap. What I mean by that is, because I'm treating this as a breakaway gap, I'm not going to enter off of this. So I'm going to the lower time frames, the 3-minute time frame, right? I enter off the 3-minute time frame, but notice where my stop loss is. It should have been at that 3-minute fair value gap's consequent encroachment, because the consequent encroachment is is in alignment with the 5-minute fair value gap. So my risk should have been up here. I don't want to see prices trade all the way back into this 5-minute fair value gap. However, when I took this trade, I let my stop loss be all the way down here instead of it being at the 5-minute fair value gap. Something I need to work on. Like I said, if it's a if it's a breakaway gap, prices shouldn't trade back into it. And my stop loss here in this case allowed it to, which shouldn't have happened. I shouldn't have had my stop loss here, and I'm going to work on that. So improvements here for next week. Being selective with the trades. This just goes back to allowing the markets to come to you, but this is more on a technical standpoint. So if I'm able to answer questions like, why did we create this power of 3? Is there time frame alignment? And can I apply breakaway gap theory to this trade? If I can answer those questions, then the setup that I see in front of me is going to be higher probability. It's going to be higher quality. So that's one of the improvements. Another improvement is paying attention to the entry pattern. Should my entry fair value gap be treated as a breakaway gap, or should I allow it to be retraced back into? If it's a breakaway gap, then manage my stop loss accordingly. And yeah. Third point, being patient. So this is always going to be a weekly routine for me. A daily routine is being patient with the markets, allowing the markets to come to you. You don't want to chase a setup. You want to let the setups come to you. So this applies to everything. In life, you don't want to chase. You want to attract. Become the person that your dreams and will be attracted to you. So if you want to become a successful businessman, then what are the qualities that successful businessmen have? They're confident, they're disciplined, they're patient, they think analytically, and if you act in those certain traits for over a longer period of time, you start to attract certain opportunities. And what makes a good, a successful businessman different from a non-successful businessman is that the successful ones take those opportunities. So I'm sorry, I kind of went a little bit off track there, but yeah, just don't feel forced to take any trades. There's no reason. You allow the trades to come to you, and if there's a trade present, then you should take that opportunity. If there's a model present that you're confident in, take the opportunity and put some risk behind it. Understand that not everything is guaranteed. Last but not least, I gotta focus on my during my trading sessions. This is something that I've been kind of, I wouldn't say slacking on, but I have been not entirely too I haven't been doing as well is being focused, because sometimes I would yeah, bye man. I would be doing other random things that isn't really trade related. But yeah, that's the pros and cons and improvements. So the trade from yesterday, October 17th, Thursday. So yesterday, coming into the morning, right, I noticed, okay, we took out previous day high, and we had this really large expansion during the Asian and London session. So I'm thinking to myself, okay, in this 4-hour candle that we are going to create at 10 o'clock here, will we create based on how we already kind of created this like really big large gap, I'm thinking, okay, we're going to create a gap, but will we create a gap that's going to be treated as a breakaway gap or not? And at the 10 o'clock open, we closed and we created this bearish 4-hour candle. So with this bearish 4-hour candle, my objective here for this morning session here was, hey, I want to see prices retrace back inside this 4-hour fair value gap based on the fair value gap theory that I have created, or not created, but just concluded with the knowledge that ICT gave us. So what's going through my head is, okay, the morning objective, I want to see prices, I want to find a short model to take out the previous 4-hour high. or low. Bye, man. Oh. I want to find a short model to target the 4-hour low, and this is in confluence with the higher time frames. So the higher time frames, like I said. Wait, sorry. Sorry. So, where was I? Yeah, okay, so higher time frames. We did have a large expansion during the Asian and London session. So here, like I said, based on how we close here on this 4-hour candle, I'm anticipating for prices to rebalance this 4-hour fair value gap during the morning session. And another thing I do want to point out is notice how we had this large dealing range here, right? This expansion, right? With this narrative in mind that I want to see prices rebalance this fair value gap, there's another confluence here for lower prices. Is prices here on the higher time frames looks like we could possibly retrace into discount. So there's two higher time frame objectives here. Retracing back into discount and rebalancing a 4-hour fair value gap. So on the lower time frame models here, I don't take a model. I'm not taking a model here based on the 4-hour and the hourly time frame. I'm taking my model on the 15-minute time frame. So based on this 15-minute candle here, I can anticipate for the 15-minute low to be taken. But keep in mind that we did create this 15-minute fair value gap, and the way we closed here, we didn't close below this 15-minute this 15-minute candle's low. So this candle this fair value gap could be retraced back into. Keep in mind. So this 15-minute model, like I said, I can anticipate for prices to take out this 15-minute low first, and then after we take out the 15-minute low, then we could, like I said, higher time frames, we still haven't retraced back into discount yet, and we haven't rebalanced the 4-hour fair value gap yet. So we have that main objective, right? But on the 15-minute time frame, I have to keep in mind that we could possibly trade back inside this 15-minute fair value gap. So on the lower time frame model, I enter on this 1-minute fair value gap, right? I'm targeting the 15-minute low. So after we take out the 15-minute low, like I said, I'm going to move my stops to break even because prices could trade back up to here. I don't know that for sure, but I do know, I have confidence in that we are probably going to take out that 15-minute low. And I move my stops to break even after we take out the 15-minute low, and then I have set some new targets at the 30-minute, hourly, and 4-hour low. So this 4-hour low here is basically us rebalancing into that 4-hour fair value gap. And one thing I do want to point out is I'm selling above the weekly open, and I'm selling above the 10 o'clock open. So in this specific bye man. So in this specific time window right now, in this specific time window, the first portion of this next 4-hour candle, I want to be a seller because I'm targeting a rebalance of that 4-hour fair value gap. So I want to be a seller above the 4-hour open, which I am here. The 10 o'clock open is the new create, is basically the open of the new 4-hour candle. So I'm selling above the 10 o'clock open here. And yeah, this is literally an A+ setup. It's pretty clean. If I break it down into those terms, it's very, very clean. Because if I have the confidence that we can at least take out this 15-minute low, then I should have taken it. I can take it, and I understand that we could retrace back inside this 15-minute fair value gap, which is why I moved my stops to break even after we take out that 15-minute low. But I still have runners. I still have some, limit orders for us to target that 30-minute low, hourly low / 4-hour low. So yeah, and pretty clean setup. So going back to the actual markets right now, it looks like we dipped. So this is why the weekly open is really important here. Look at how we dipped right into the weekly open and started to get this expansion during on this hourly candle. So now on this 4-hour candle, right, we're closing above the previous 4-hour candle's high. What does that mean? That means this 4-hour fair value gap that we're creating here should be treated as a breakaway gap. So this very next 4-hour candle, I want to see us open. I want to be a buyer below the 10 o'clock open here. Open, maybe create a down, maybe manipulate a little bit, and then take out the 4-hour candle's high. I want to be in this area of the trade here. I want to be in this portion of the trade. And I mean, this very next 4-hour candle, I mean, we could actually end up creating a down close candle. But the very first portion of the 4-hour candle's creation, I'm anticipating that. Because, I mean, after we complete the 4-hour objective, to take out that 4-hour candle's high, anything could happen. We could continue higher, or we could actually just reverse. So I just want to trade that first initial objective. So there's that, but we still have about 2 minutes left, so let's pay attention to how we close here. And while we have that 2 minutes, I'm going to use that 2 minutes to actually log into my trading platform, which is why I had to move my screens over to a different screen. Can't have y'all looking at my info here. All right. Yeah, it looks. Ooh, this looks ugly. So even though I could come up with all of that, even though I could come up with that narrative just now, am I gonna take a trade? I don't know, man. Like, this doesn't look too good. Do you want to be a part of this? Really, you don't want to be a part of this range that we're in right now. I don't know how people even like trade this. They see this 1 minute candle here just got 1 minute fair value gap just got ran. We're disrespecting it. We just created this 1 minute fair value gap. I'm gonna take a long here. Let's take a long, let's take a long target, whatever that is. New York PM session highs. Oh, I just got stop lost, or I just got stopped out. All right, we just created a 1 minute fair value gap to the downside. Displacement. I'm gonna take this trade here. Target these lows. We trade back up into it. Oh, I got stopped out. Oh no. Yeah, it's not good looking at all. So, which is why I trade the power of 3 model. And yeah, we can see what we do here. Continue to watch. So there's the open. I'm gonna mark out the 4 o'clock or the 10 o'clock open here. 10 o'clock open, specific time 10. So like I said, my morning objective here is to take out that 4-hour candles high first. But if we start to see displacement on the lower time frames bearish, then my narrative is going to switch. But like right now, my bias is for us to take out this 4-hour candles high. And will we get a setup that allows it? Who knows? And while we wait A+ setups, I went over pros and cons. Surely, you guys, surely I can get my brain warmed up now with some chess. Black to move, black to move. Wow, I think this is a breakaway gap. Or breakaway pawn. Just had to move that pawn. White to move. Here, here, here. Oh. I'm not even entirely sure. Are we moving this way? Oh. What the heck? Wait, why would I ever do that? What? Okay. Like to move. Take. What the fuck? Are we going this way? We're going this way. You take. Interesting. Oh, maybe it's because I want to get these squares here. Ah, see, I see. Right to move. Is anything hanging? Here, 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 here. That's not the first move. Here, here, oh wait, here, 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 here. Oh, no. Here, here, here. Oh, it's this queen sack. Whoops. In here. Wow. Sack the queen. Bishop trades. And I go here. We go here. He can go there. Oh, he can because there's that. Wow. That's a strong position. A very, very strong position. Okay. I want to listen to some music. I'll play the same thing here, buddy. These guys playing the same setup as my. Sure, you probably just want to trade here. I'll trade there. Alright. If he doesn't move his queen or knight, I'm actually just gonna push up. So if we take out this 4-hour candle's eye, I'm just gonna close the charts. There's no trade that got presented to me. No model. No 15-minute model or anything like that. Whoa, the music's kinda loud. Please, YouTube, don't copy strike. Wait, what? Oh, wow. Really? How did I miss that? Gosh. Alright, well, we just took out the 15-minute high. There's a large SMT here.